Welcome to Rise Exchange Weekend. I'm Akhtar Khan, in for the vacationing Andrew Schmertz. What's in a deadline? That's the big question tonight, after Greece is no closer to sealing or a deal for a bailout. The country's finance minister met with his Eurozone counterparts on Friday, where the deadline was pushed back until June. Now, the president of the Eurozone finance ministers issued a stern warning to Athens, saying a deal must be in place before any funds can be released. Well, Jay Morelock, FTN financial economist, joining us now, has more on this and playing with the global markets, as it seems. Joe, welcome to the program.
Thanks for having me.
So is Greece going to meet its obligations, do you think?
In the long term, I would say no. Without some sort of deep restructuring to the economy, what it's really going to come down to is, do the Greek people want to go about this alone, or do they want to renege on austerity, which is why they elected the left-leaning?
Hasn't the Greek government got its back up against the wall in some sense? Because they've been asked to sell Greek assets, they've been asked to raise taxes. They've got to find the money somewhere. How are they going to do this?
Well, that's the problem. The problem with raising taxes right now in Greece is twofold. First is their economy is shrinking. So it's hard to raise taxes from an economy that's shrinking.
Absolutely.
And secondhand, it's not really a part of their culture to necessarily pay taxes. One of the things that the Troika is trying to push on Greece right now is to have an independent commissioner come in and supervise tax collection. So as you can tell from the proud Greek people, to have foreigners come in and sort of monitor their tax collection is very much a put off to them right now.
Well, so of course the Greek government have a bit of a problem. They were elected on the mandate that they had to deal with the financial issues, but not to deal with the austerity plans. So how are they going to weigh this up with the public?
Well, that's the big question right now, and it could be it's more or less a contradiction. I think it's going to have to turn back to the Greek people, and I think the Greek people are going to have to decide once and for all: do we want to do this on our own? Cancel our debts, go back to the drachma and almost start over, or do we want to instruct, we're going to have to pull back pensions, we're going to have to lower wages, and actually get to where we can sustainably manage our debt while still attempting to grow the economy. And it's a very tough position.
Okay, so two things out of that in that case. Is it feasible to extend the deadline? We've already had an extension. Can we do this again?
Can we? Yes. But from a creditor's perspective, from Germany's perspective, I think they've kicked this can down the road as many times as they want to. At some point, if they don't put their foot down and say, this is it, their own credibility gets called into question. So if the deadline's never official, they can just keep pushing it back, and at some point, they're going to have to put their foot down.
So let's talk about the wider implications, not only to the Eurozone, but across the world, and particularly in North America. How is this going to play out, firstly, in Europe? Because I know Angela Merkel has been very vocal about saving the Greek economy for obvious reasons. Beyond the Eurozone, how is this going to play out in the US as well? Well,
it really depends on what happens. If this continues into more or less too much debt has been built up, and it's just going to be slow growth, where they're going to hit their 1% a year, we're going to stagnate. The big risk right now is to a unorderly dismemberment of the euro. And when that happens, that's when all bets are off. What that really does is it hurts our exports. It's going to really just sap demand from the Eurozone as they all have to restructure and maybe on their own currencies. So it would be a huge hit to our exports, mainly.
What about Greece, though? Is it feasible for Greece to leave the Eurozone?
It's feasible.
If it's come to that.
It's absolutely feasible. It's going to be very tough. I think no matter how you slice it, Greece is going to have a very difficult decade for the next 10 years. And the big question is during that decade, are they going to be exchanging euros for goods, or are they going to be exchanging drachmas? And I think that is what needs to turn to the Greek people. And I think it's just a matter of, really independence from what they seem as demanding creditors, or going along and staying in the euro and realizing that actually the benefits outweigh the cons here.
We're talking about a sovereign nation here. We're talking about the repercussions it has also with other possible nations if they don't meet their obligations, stay within the eurozone. Very, very finely, Jay, if you can just elaborate on how that's going to affect domestically and internationally as well.
Sure. It's going to be a lot of pain for the Greek economy. I mean, they are a sovereign nation. They're a proud nation. They have a deep history. And as you can actually see with a lot of the social leanings, so usually when we have a decade or two of collective globalization that has really, I think, peaked in 2008, we start to see that disintegration. As we disintegrate, parties pull out to the far right and to the far left. We see that in our own, Congress right now. So as this happens around the world and we sort of disintegrate throughout Europe, especially in Greece, I think Greece is the focal focal point that we can almost use as a microcosm of what's going on in countries all over the world. So as we begin to disintegrate and branch out into the far right and the far left, this is usually when it becomes very hard to push through things like fiscal policy and monetary policy.
Gosh, watch this space. Jay, thanks very much indeed for joining us. No doubt you'll be back on the program talking about this again. Thanks very much, Jay Morelock there. And talking about a rebound, another green day across the board. The Nasdaq beats its closing record by more than 30 points, and the S&P 500 closing past its record as well. Now here's a quick look at the final numbers. The Dow closing at 18,080, the S&P 500 closing at 2117, and the Nasdaq ended the day at 5092. And the top stocks we're keeping a close eye on. Shares of Amazon spiked in early trading after reporting quarterly revenues that jumped by 15% to $22.72 billion rather. Amazon closing at $446.08. And the nation's largest airline, American, posted a record first quarter profit. American earned $932 million or $1.30 a share, compared with $480 million or 65 cents a share a year earlier. American Airlines closing at $50.68. And Chipotle lovers can now get their burritos, believe it or not, in the privacy of their own homes. The company announcing that it will be making deliveries in 67 U.S. cities. Chipotle closing at $637.50. Now for a look at the commodities, gold closing at $1,178.10 an ounce, and oil closing at $57.21 a barrel. And another important economic data that's out today, the Commerce Department says orders for durable goods in the U.S. rose to 4% in March. However, that increase was driven by a higher demand for cars, commercial jets, and military hardware. Well, coming up, it's a rich man's game, how rising ticket prices are forcing fans out of the arena. You're watching Rise Exchange.